All right, so in this class, we are going to learn about three things. Mind you, this is a continuation of um, the previous video that I uploaded. Okay, so it's a flow of thought. Now, you are going to learn about liquidity, the two types that we have. You are going to learn about inducement, also the two type, and point of interest. And here I will mention about understanding order flow. All right, because it's important that you have a range or a level where you are trading from, where you are looking at market reaction. All right, there are some people that they don't have that. Now, liquidity, let's go to liquidity. I said that we have two types. So we have two types of liquidity, right? We have the type A and we have the type P. Like I have said in the previous video, if you have watched it, is that the linguistic of trading is not as important as the understanding of it. So don't be carried away with the language, right? Type A, type B, liquidity, inducement. What is important is that you are able to identify it in the market, and then you understand the concept behind it. Okay, so now types of liquidity. So before I go to the types of liquidity, let me just quickly point this or say this here so that we can be on the same page. There are some traders that believe that here is where we have liquidity, which is the high, and here is where we have liquidity, which is the low. Okay, that is true, but that is not a complete truth, because liquidity does not only rest on the high and lows of the market. Liquidity is everywhere in the market, because what drives the market, what causes the market to move, is liquidity. Therefore, if there is no liquidity in the market, that means that the market will not be able to create a new high and a new low. So the balance understanding of that school of thought is that we have more liquidity in this area than we have in this new area where price has not gotten to. So let's just assume that this is all the charts in 2025, okay, and price has not passed this high and has not passed this low. Okay, so there are liquidity here also in these prices, because there are some people that believe that if price can um drop below this level and close below 1.32, that the market will continue to drop. Therefore, they can set a limit order here. Do you understand that concept? So that means we have liquidity here. There are people that are looking for an entry, or they've set their order here, while there are other traders that believes that when price gets to this order block, it's going to push to the upside, right? So there's a liquidity here, there's also a liquidity here, or there are liquidity here. Some can go like this is a very strong resistance, so price is going to drop, so they are looking to sell. They've placed their order here already. And some believes that if price can close above here, it is going to buy. So they have a breakout strategy. So that means that they can go like, they are going to set their order at 1.37484. Price has not gotten there at the moment, but their order is resting above that high. Do you get the concept now? So the balance for this liquidity concept is that we have more liquidity here around this high and around this low than a place where, or a price level where price has not gotten to yet. Okay, so there are liquidity everywhere. That is the first thing that you need to understand about that. So I'm going to be drawing showing you right now the types that we have with a bullish example. So let's say that price dropped to the downside like this, and then take out this high okay, and then drop to take out this low. You get that? And then push up to take out this high. Okay, so this is the first type. So let's call this, like I said, type A. Okay, type A. So now based on the previous video, right, the things that I have explained, this is going to be This is going to be a break of structure. Okay, break of structure, and then we can name it M, that's small letter M BOS, that's minor break of structure. And this is going to be another break of structure, which I'm going to label capital M, which is the major break of structure. Okay, and this level here is what SMC tags as the liquidity sweep. Okay, the liquidity sweep. So this is one type that you will see in the market, you understand. And then we try to trade from the order block here. That's the order block that caused this break of structure, right? If you have seen my video on break of structure, you will understand the three types of break of structures that we have: the strongest, the second strongest, and then the weakest or the third strongest. Okay, then you'll be looking to buy here. All right, so this is type A. Now type A has, you know, minor break of structure and major break of structure. Okay, I'm going to show you an example on the chart, and then let's quickly let's do type B. Now this is going to help you, right, in your trading. When you want to make a decision, you will know which liquidity type to really invest your money in, and they want to be conservative about. So price drop to the downside, all right, push up, okay, drop to the downside, and then break structure. Okay, so let me adjust this. So this is what we have. Can you see the difference between the type A and the type B? Right, so the type B has just one break of structure, not two. Can you see that? It looks like a W pattern, a break of structure, and then it has liquidity sweep. So the difference between type A and type B is that type A has two break of structure, which is the minor and the major, while type B has just one break of structure. Can you see the difference? So this type A is stronger than this type B. Type B is not weak. Please get the concept straight, because you will not always see type A in the market. Okay, you will most likely see this one often. All right, maybe like 60% of the time, and you will see this also. So I'm going to show you the two in the market. So what this teaching is going to do to you is that you will be able to interpret the market, and when you have a win, you will know why you have a win. When you have a loss, you will know why you have a loss. You are not going to tell yourself when you have a loss that is the market, you have to lose as a trader. No, you will know the reason why you lose, and after some time you will be able to tell that with your strategy type A is fantastic, or with your strategy type B is fantastic. Okay, so let's go to the chart now and look for type A example and type B, so that this video can be fast. So now let's look at this. We have a drop to the downside, a push to the upside, a drop to the downside, a push to the upside. Now which type is this? Is it type A or type B? It is what? Type B, because type B has just one break of structure, and as we can see here, this one too has just one break of structure. Can you see that? It has just one break of structure. Okay, now let's continue. Let's look at this. When you learn this, you will know what the market is doing. There are some people that no matter how you look at the market, if you have not learned it, you won't see it. Okay, so that's why it is good to learn and to practice also, so that you can train your brain to see these things on the chart. Now, this liquidity concept, which type is this? Is it type A or type B? Good, it is type A. Why? Because it has two break-off structures, which is the minor and the major. All right, now When you have this understanding, you will always be on the right side of the market, because there are some traders here that would have tagged this sweep of liquidity as their change of character, and then they will be looking to sell the market. And as you can see, the market is pushing up, so it's going to be a strong loss for them. And by the time they are tired, they close their trade, they come back the next day, they see that the price is dropping and they are frustrated. All right, but for you, you are going to understand that no, this is a what? Type A liquidity. All right, now let's check the last example. Let's check the last example. Let's see this. We have this. Okay, this break of structure, sweep all the liquidities that we have here, both this one and this one, swept everything and pushed to the upside. All right, there's no need to go and check the types that we have. This is already type A, liquidity concept. All right, we have the minor break of structure and the major break of structure. So these are the two that we have in the market. So next time that you are trading or you are analyzing the market and you want to take a position, before you take your position, always look for the kind of liquidity that is in the market. Okay, always look for it so that you don't become liquidity for the market. All right, so this is very, very important. Now, as an SMC trader, we take our position from order block. All right, of course you can take your position from fair value gap and from other region, but the best position is from the order block, right? So now, if we draw the order block of this, and mind you, I'm still going to explain to us the concept of order block, because there are some order blocks that are weak while some are strong. So each of these order block has their own characteristics as well. So you also have to understand it, because it's possible that you've traded from an order block before and you lose uh you know back to back, and then you are saying that, oh, when this thing is being explained in video it works, but when you are trading it, it doesn't work. Is because there is an understanding to it, also to know the kind of order block that you are trading from. There are some other blocks that it has been mitigated from the very beginning when it was created, right? You can see price tap into it and push to the upside. Let's look at the other block of this one too. Let's delete this. Let's look at the other block of this guy too. So we have it here. Okay. Sorry. No. So we have this. Okay. This is good. All right. So you can see that now. Anytime you want to trade, you put your stop loss below this low. All right, so I'm going to teach us about entry model. This is just an example to show you that price respect this type of liquidity, the type A liquidity. All right, of course it also respects the type B liquidity. All right, now you can see price tap into it and price push to the upside. Why is it that price didn't continue to push to the upside here and has to come down to this other block? Is because this is the first liquidity print. All right, so price has to respect this second one, right, which is the same with this, because this and this is type A. So price has to respect it now before coming to this level. Look at type B also. So type B, like I said, works. Is not like type B liquidity doesn't work. It works. You can see that price came to this level and also pushed to the upside. All right, what this understanding will do for you is that you'll be able to take advantage, because trading is about opportunity. There are some people that they make wins, but their wins are smaller than their losses. Do you get that point? So this is going to help you to know when to really take advantage of the opportunity that the market is presenting to you, and when to be conservative. All right, so this is the concept of liquidity. All right, the type A and the type B, how to draw them. You understand, the type A has the minor and the major break of structure, while the type B only has one break of structure. So if you have any question, I would like you to use the comment section, ask your question, and I would like you to also like this video, share, comment, and thank you. God bless.